All right, ladies and gentlemen, connecting women, inspiring change, making progress. Citibank there. You sure that's not the Hillary Clinton campaign? Ha ha. Ba-dum-bum. No, that can't be because they have corporate email. Ba-dum-bum. All right. Ladies and gentlemen, welcome to the Daily Closing Bell Report. And before we get to Rob Williams, NewsmaxFinance Deputy Editor. I still think that title should be changed, like some word should be turned around. Anyway, here are the closing numbers. And, oh, look at that. They're all down. And we don't want to be down on Friday, but here it is. 279-point drop for the Dow to close at 17,857. NASDAQ down 56 points. They're now down to 4,927. The S&P tanked 30 to close at 2,071. And the market opened in the red. Yep. Because, don't tell me, because 295,000 jobs were created in the month of February. And that led Wall Street to believe that good news was bad news because it puts us that much closer to interest rate hikes, correct? Yep. All right, let's go.
Okay, I'm done.
Goodbye. See you later.
Okay. No, that sums it up brilliantly. That it was all driven really by the speculation about what the Fed is going to do in reaction to this jobs report. So we saw it early off with the dollar just on fire today, going through the roof in comparison with other currencies like the euro, and just other things kind of like falling like dominoes in reaction to that. So we saw gold selling off.
Oil.
We saw oil selling off, and then we also saw stocks selling off. And so the only thing that rose, I suppose, were Treasury yields, because people expect that with the rate hike, Treasury yields will rise. And investors will start to put money into the United States, so they're buying up dollars to do that.
But let me ask you this: you hear it both ways, because we've known for so long that interest rates are eventually going to go up,
right? And
now we've been known for a while that it's probably going to be this year. So it's obvious by this reaction today to these jobs numbers that could be expected, and as it happened, but that it's not yet built into the market, the interest rate rise. In other words, when it happens, we're going to see more decline and more decline because, in fact, even though it's expected, it's not yet built in. Is that fair or not?
Yeah, that is fair. It's still not a done deal. I mean, the market the market only gives a 1 out of 4 chance
for June.
Of a rate hike in June. It can still happen in
September or next year.
Right, because there's still a lot of variables out there. Unemployment falling to 5.5% today. That is one thing that the Fed said that they would like to see the rate, although they may not have formally said that, but that does indicate to them that the labor market is strong enough and that they can take the economy off life support.
Although wages just crawling along, not really rising, which is something else they pointed to, that they need wages to go up. Yes. And when you look at workforce participation, 62.8%. And that is, it's hovering near this 37-year low for the last 11 months. So workforce participation isn't moving much. And just for the record, Hillary, 56,023,000 record number of women not in the labor force. So while you could point to these jobs, which, and tell me if I'm wrong, a lot of them were restaurant related, correct?
Yeah, very low wage, low paying restaurant jobs, or part-time too. That's the other problem.
So I'm sitting here saying, as a partisan skeptic and partisan layman, but as a layman, I'm saying when you get to these numbers, what you just said, and it pretty much is a stinky recovery. So why would they raise the interest rates?
Well, and that's the when you look at some other parts of the labor market, all the stuff you cited, but also the number of part-time workers that want a full-time job,
can't get it.
Companies are saying, you know what, with Obamacare, it makes it too expensive to hire.
By the way, I'll come up with more great terms you could use later. Stinky recovery, you could have that one. Just so you know, you could quote me. All right, folks, that was Rob. Have a great weekend.
Thanks, Steve.
And if you want to take control of your financial future, there it is, Apple. Oh, we didn't even talk about Apple's going to the Dow.
Yes.
Apple's going to become a Dow component, baby, because it's so big. Go to newsmax.com/finance. Don't go away.